Every relationship that works has two parties with a vested interest in the outcome. It's got to be a relationship of mutual respect. It's better to ask questions. What don't you understand? And then it's a communication. It's never someone else's fault. I come from a background of extreme personal accountability. I was raised in an environment without excuses. Your word is your word. No one is responsible for me and my actions. My children, that's what I would tell them. I said, it's no one's responsibility to do anything for you, to believe with you just because you want them to believe with you. It's on you. I will love you to the end of the earth and end of time, but that doesn't mean I'm going to agree with you. In fact, to the contrary, I'm going to be the first person to disagree with you, because a lot of people won't disagree with you, but I will, and I'll do it in a loving way. But I'm going to let you know if I think you're wrong, or at least if you're missing something to consider. So I think it comes down to communication and respect and honesty.
Welcome to another episode of Success with Purpose, where we help mentor you into becoming a more successful version of yourself. We do this through giving you access to mentors you typically would never have the opportunity to connect with. We explore their journeys, their experiences, their life-changing events, their fields of expertise, and most importantly, their purpose. My name is Harry Goldberg, husband to an incredible woman, father of two amazing daughters, host, interviewer, and interrogator of this podcast. And now, just before we learn from yet another exceptional guest, if you find value from these conversations, please make sure to like and subscribe below, leave a review. It really does make a difference. And of course, share it with someone else who's going to find value. Now, listen in, pay attention, take some notes, enjoy. Let's begin. Scott Andrews, welcome.
Thank you very much, Harry.
I'm looking forward to this conversation, and maybe I'll just give a brief intro of you for the listeners, and you can correct me wherever I've gone up to. Scott's been a CEO of an extraordinary journey, from CEO of a dotcom company, which reaches billions in valuation. You experienced the crash and losing a lot of wealth, so you became a professional trader. You managed millions of clients and funds. You transitioned from discretionary trading, which is manual trading, to automated trading. Learned to incorporate AI tools probably before they became so popular. And now you're running an automated trading company, helping clients to achieve pretty impressive returns. And you're a husband and the father of four, and you're much more experienced in your years. I'm really looking forward to learning more from you.
Well, thank you, Harry. Excited to be here.
Okay, to kick us off, a nice, easy question. How do you define success?
I'm not sure it's as easy as you might think, or maybe it is for everyone. My definition of success has changed over the years, right? So when I was starting out as a teenager, my view was to be a successful businessman like my dad, and perhaps even serve my country somehow as well, because I was surrounded by two grandfathers that served in World War II, a number of uncles that were in World War II. I had other uncles that were in Vietnam and Korean Wars, and my father went to military college and then dropped out to marry my mom. You can probably guess why, because you're looking at him. And so serving my country was something in the back of my mind, but I really just wanted to be a successful businessman and honestly have a trophy wife like my dad did. So my dad was sort of my idol and had married my incredible mom, and they had this great life that I was a part of. But that was just sort of how it started. And then as I was thinking about this, even preparing for this, conversation today, I realized it really changed as I got into my 20s. I'd gone to a fairly prestigious college and had built up a healthy self-esteem and self-confidence. Some would say excessively healthy. And I realized I could be more successful than my father, and to not try to be more successful. Of course, my mom was telling me the same thing, would be sort of a waste. But my view was, because it was sort of terrifying thinking about aiming, and my dad's just a small town businessman, like I mentioned, did not graduate college, but incredibly bright, passionate, motivated, smart businessman. And the thought of having a goal, like a lifetime goal for defining success to me as exceeding my dad's success, was pretty scary. because I didn't really know, right? I mean, I just graduated from West Point. I was in the Army, and I had other things going on. But in my mind, I was sort of trying to get to a point and be beyond my father. But I needed a. I'm just being frank. I think subconsciously I had this. I needed to be able to rationalize what failure would look like, right? Because there's no guarantees, and there's ways to measure success in many different ways, if nothing else in terms of material possessions or financial bases, as simple as like how much income does my dad make each year versus what I might end up with. And I got to a point, and it just struck me one day that there's no guarantee I'm going to be more successful than my own father, and that would be fine because it was sort of the chase that was exciting to me, the attempt to do so. And I realized it was really all about, well, I really didn't realize it until I was asked to speak. I didn't come up with this phrase or this approach in my head, at least. I didn't verbalize it until I was asked to be the commencement speaker for my high school graduation at the young age of, because I was 35 years old. And that was a huge honor. I went to a small high school, very small, but it was still a huge honor to be invited back to my hometown to be the commencement speaker and speak to these, 100 or so kids and give them my views of the world and give them advice as they embark on the next leg in their own journeys. And the title of my speech was "Who Wants to Be a Millionaire?" And at that time, we had just taken a company public that I'd started with 2 childhood friends and another very close friend, and we were public on the NASDAQ exchange, and I was worth many, many millions on paper, at least, right, in terms of my stock wealth from being the CEO of this company. But what I really meant was to get their attention, because I'd come to the realization that life is fluid, right? Things happen. There was no guarantee that I would end up in the position I was in. And when I embarked on my path, I just wanted to have sort of modest success and felt like I was, in the Army terms, being all I could be, right? Being the most successful I could be. So if I did that, and whether I achieved, some tangible, quantifiable measure of success as being a millionaire or more successful financially than my father, didn't really matter as much as what I posed to this group of graduating seniors, which was live your life in such a way that when the end is near and you're sitting on a porch in a rocking chair, reflecting on your life, you wouldn't trade all of your life's memories, events, and happenings for any money in the world. That there was no financial gain that would have made you happier than the life you'd lived, just from the way you had lived it, what you had experienced, what you had overcome, what you'd achieved. So I think it was being a memory millionaire. I wanted to have millions of dollars worth of memories. And whether that translated to a single dollar ultimately or not really wasn't all that important, because I couldn't necessarily control all of that. So I had a healthy dose. My vision, my definition of success was clearly about the journey and hoping that it all worked out.
I love that perspective. Like $1 million, but not specifically about dollars.
Now we'll tell you, and I'll let you, not to continue, but it changed one more time when I had kids.
Can we get to that third change in just a moment? Okay, so
Sure.
you were first trying to kind of emulate your dad, try and be as successful as your dad. And that was when you were a teenager and you really looked up to your dad. It sounds like you had a beautiful upbringing as well.
Very blessed.
And then you started realizing maybe you could even surpass him in terms of success. And I guess success back then, you were mainly characterizing it in terms of how well you're doing it compared to your dad. So how well you're doing financially, how well you're doing with the beautiful wife and having the kids and doing well in military and in career and all that kind of stuff, right? That was the comparison?
Yep.
And there was
I will say this, it was also very, very evident. My dad was, while he worked really hard, he was extremely happy. I was, like I said, I'm very blessed. He is a very happy person. So he had balance in his life, at least enough balance, I guess.
So was balance part of that success for you when you were young?
I recognized that he was this incredibly successful businessman, but he never missed a single sporting event. And because I went to a very small high school, I played 4 different sports, and he never missed anything. I'm sure he missed 1 or 2, extremely rare. In fact, he was even at most, high school football and basketball and baseball practices. So he had flexibility in his life while still providing. And again, we weren't wealthy, but we were from a small town, but we had enough, and I knew that. I could sense that, and so that's what I was striving for.
Okay. I might have misheard you, but earlier on you said something about how you need to rationalize what failure would look like. And did you start to look at what success is based on what success isn't? Is that where you started considering that?
Yeah, because as I evolved in my vision to exceed my father, right, to have some tangible measures, I may not be successful. There was no guarantee. So I had to it did make me think, was that the appropriate sort of definition of success? And I'll be very clear. I'm a very type A, highly driven personality. And a large part of that was just born that way. And my father's the same way. We're very similar. But I knew I may not be able to succeed him. And the thought of failure I don't know. I don't like the idea of failure. I've been successful in part because I had limited competition growing up, and but the thought of being ambitious but not achieving sort of what was in my mind was scary. So I needed to rationalize that maybe that wasn't really just success, and that's where it really started evolving from being more successful to the journey of trying to be more successful. And that's where the memories, became just building a lifetime of memories that I wouldn't trade for anything else was ultimately. And it really did not strike me until I was sitting on a beach with my wife, and she was helping me sort of prepare my speech at the age of 35. And I was going back to my hometown and so excited. And it just sort of dawned on me, that's really what this was about. And that's how we were living our lives, just making these memories. And we'd been so fearless in this company we'd started with and exceeded every tangible measure of what we should have achieved. I mean, we just caught lightning in a bottle in this technology business that we started, that we really had no sense starting, and I shouldn't even be talking to you today, but we are, because that first company, we were able to come up with a crazy idea in 1995 and take it public in late 1999.
Just the right time, I guess. And so I'm still really curious about this idea of failure, because most people, when you ask them about failure, I'm not talking about necessarily most of my guests on the show, but most people, when you ask them about failure and they start talking about it, they start talking about the perspective of the tangibles of what it would mean to fail. And they're really clear on what the failure is. And so they define success, the opposite of success, as all these things which they've failed at. And you kind of haven't defined failure as an outcome. You've defined failure almost like in this definition of the opposite of success as not doing the things that keep you moving towards that journey where you're sitting on the rocking chair looking back at your life. Is that a fair way to interpret it?
Yeah, I guess my root, I don't really believe there's many failures in life if you're trying your hardest, if you're doing it the right way. So to me, it was just, failure wasn't how much money I was going to make. The only real failure would have been not trying my best with what God had given me. And I'm a spiritual person, and I'm not a great, I guess you'd say I'm a Christian. I am Christian. I'm not a great Christian by any means. Been as big a part of my life as it probably should be, but I do feel like I was blessed for whatever reason with a set of circumstances and parents, and not given much. I mean, we were neither. I'm the first in my generation to graduate from college in my family tree, so I just felt like I was, I don't know, to not, I don't know, not to do well, not to do good, as they say, to not give my 110% all, to achieve more than my parents had in a relative sense. Like, it was very clear to me that it became clear, I should say, as I got older, in my teens and the 20s, that wow, my dad had really kicked ass with what he was given in terms of everything. So that was failure to me, not achieving my best, not doing my best would be failure. But it wasn't failure not to hit some tangible measures. It was failure not to do the most I could with all that I was given. And I still feel that way. And that's why, as I mentioned when we started talking, it's a moving target, right? The more success I have in more traditional senses of the definitions, the more I expect out of myself. And that just
I like that. It's not. It's
keeps
not
moving.
just a. It's not a static target that you have. It's not one. Okay,
Not-
I get there, then everything's all good. It's how can I keep pushing forward? Because you have enough wealth, you have enough financial security, you have your family, you've made it, right?
Yeah.
But you're still working long hours. You're still pushing yourself. You're still doing all the things you can possibly do to be able to keep achieving more success, however you're defining it, right?
Well, that gets to where I was saying that's exactly right, to where it sort of changed with kids, and everyone has their own perspective, and mine is probably different than many. But by the time I was 35 when I had kids, and I'd just given that speech about who wants to be a millionaire, and that was right before the dotcom crash, and our stock price dropped from I think a high of 93 to $3, $4, five. I don't know.
Wow.
It was, I think I've literally blocked some of those memories. And all of a sudden I realized that I'd lost on paper 95% of my net worth, and I wasn't done. And it changes. So part of that was the business and the market. In fact, the company survived. I'm very proud of that, and has 1,200, 1,300 employees today. But we didn't know if it was going to survive or not. And all of a sudden, my measures financially of success had already been set very high at that point. And now it was like, wow, I may not be done at all. So it was a really, it changed my definition of success to some way, because all of a sudden memories weren't enough, because memories weren't going to help me provide the security and protection that I wanted to afford my family, that I'd imagined, because I was worth many tens of millions of dollars, just being blunt, all on paper, my stock worth of this technology company. But now it wasn't many tens of millions. I was still okay, but it wasn't anywhere near what I thought it was going to be. And now I had kids, and so now it changed in many ways, because now I'm starting to think, well, shoot, that sucks. Maybe I don't have the time, and I just worked 7 years or whatever at that point, nonstop, literally. I wish I were exaggerating, but at least 6 days a week, and most of the time 6.5 days a week, sometimes many times 7 days a week, for years, to build this company from scratch, an idea I'd created in my own head and built, just poured my heart and soul into. And now, after all of that, it wasn't anywhere near what I thought it was going to be. And now I've got kids coming, and I didn't want just wealth. I wanted time. I wanted time to spend like my dad did. Because now I'm thinking about all the times that my parents were always there at every event, and that had to be. And I couldn't have done that in the prior 7 years. I just honestly couldn't have. So it became so much more than it was. I needed enough wealth and enough time. So it was this ratio in my mind, I guess, that was sort of evolving, where the balance of how much money is enough and how much time is enough. Even my wife, she doesn't really bring it up anymore, but there were many times, even in years not so long ago, where she was saying, how much is enough, right? Don't you, how much are you missing out on with the kids? And I'd get very defensive. I'm like, I'm not missing on anything. And because I don't miss events. I haven't missed events in my kids' lives that were important, even one. In fact, preparing for this interview, I asked Laurie, I said, have I missed anything that I should have been at? Because I don't want to overstate that, because I'm proud of the fact I don't think I have. And she goes, you're right, you haven't. But then she said, this was interesting, she says, you were there physically always. I'm like, ooh, yeah. My head wasn't always there, If you ask me what was one of my daughters wearing at their first dance recital, I couldn't tell you. She can. So I've lost some of the details over the years. It's not just time. It just, I think I think she's right. I think I wasn't always there in the moment. That's really hard to do when you're trying to balance a business person, a serial entrepreneur at that, taking on incredible business challenges that are way beyond what any rational human being would try to do with with my intellect and skills, honestly. So I take on giant goals that are beyond it, and it sucked my attention away, though I
I can
always put the
imagine,
hours there.
especially if you're defining your success, or part of your definition of success has been building the memories for when you're in your rocking chair,
Right.
and how much money is enough to take away those memories. And you literally just said that you gave up memories for money.
Yep.
It started to morph for you when you had kids and the company price absolutely plummeted from 93 down to $3, which is crazy. And so what looked like you were really set for your entire future was suddenly not so much. I mean, you lost everything. You need to rebuild from scratch, both your mindset, but then also your finances ultimately. What mindset or strategies helped you bounce back? It's a pretty major setback.
Well, to be clear, I didn't lose everything financially. I was still in a great position at my age, but not nearly as good a position as I thought. So the company survived, and I was. We brought in a new team. I brought in a new CEO and team, and we transitioned the company. And I stayed on board to help them be successful for next 2 or 3 years, while I also transitioned into what I wanted to do next. So I did have the luxury of more time than most, and I had an incredible resume, raising funds and taking a company public at a young age. And with the children coming, I didn't know at the time I was going to have 4 children. So I I would have been really stressed at that point. We had 2, so we had 1 in 2000 and 1 in 2001. So I did have the 2 kids, and wasn't overly worried. And my confidence was supremely. I mean, I'd been on a roll from just through high school, through college, West Point, Army, then a little bit of business. Then I got my MBA, and then I started this business, and I had all this great success. It took a couple of years to get it going. So it was a shock. It wasn't easy. It was one of the hardest periods in my life and my wife's life. But I wasn't worried as much about getting the money back, because in some ways I'd been spoiled by my success. I had supreme confidence that I would recover more than enough. But what I wasn't sure about was the time component. And that was the big stressor, which was what job can generate the kind of minimal wealth I'm looking for to provide and protect for my family, while providing that time, that I knew I wanted and was committed to providing to my kids and family. So that's what the big stress was. How do you find that intersection? So
You're sharing how it was like this. It was a pretty big shock, right? It wasn't easy. You said it's the hardest part. It was the hardest period in your and your wife's life. That's a pretty tough thing to get out of. And it sounds like, from what you've shared so far, it sounds like the main way you approached it was saying, well, it's so tough because we thought we were multi-millionaires, and now we're nowhere near there. And so you probably had plans based on that, and the type of house that you're buying, and the type of risk you're willing to take on, and what you planned for with your kids, and when you're going to be able to retire or stop working, and all that kind of stuff. How did you get through it?
Well, honestly, my wife, who was more involved in our church, or was at that time, and because I hadn't even had time to go to church in the early days of starting, the company was SciQuest, if anyone's interested, SciQuest. She drugged me to a Bible study kind of group, which I'd never participated in one before. And it was called A Purpose-Driven Life, where we were studying a book named A Purpose-Driven Life, written by Rick Warren. And the very first line in the book took me about a week to get past. And I'm really serious, because this was all fresh on the heels of we're relooking everything in our lives. We stopped building our 9,500 square foot house. Because we it didn't make financial sense anymore. We were almost finished with it, actually. It was all the things that you just mentioned were really stressing me. What was I going to be when I grew up, and so on. And the first line of the book was, "It's not about you." And it just, I don't know, I still see it as plain as day, as plain as the first time I read it. And it just made me rethink why I was possibly here and what was my purpose. And I don't know, it was just it gave me solace. It made me reorient. The children, intellectually, I knew were going to change everything, but I had a few years, right? They were still babies. They were just infants, and they're this little big blobs, at that age, and they're not going to remember if I was, how engaged I was, whatever. Though I was very engaged, the best I could, but I was still always, I felt like I had a few years, but it did change. I don't know. For me, it just we fell back on our spirituality and what really made us happy and what we wanted in life. And we used to joke when we were starting the company SideQuest, and the worst that would happen, and we nearly went bankrupt several times, and I'm not exaggerating. We had no business surviving, but we kept pulling it out somehow. We used to joke that the worst, and the reason we sort of were able to pull the trigger and risk everything at the age of 30, started the business less than a year after we got married. So right. Sort of a double cross on our financial. I was doing well as a salesperson, and said, hey, I'm going to risk everything and we're going to go for it. And I see the future, and the future's now. And it's the internet's going to change a bit the way businesses buy products and source goods and so on. And it was that we would, worst case, we would have each other and we would, sell ice cream at the beach. So she and I both joked about, we wanted to, we neither one of us had ever worked at a beach, and really, I was so driven and motivated, and her family, she needed to work as well. And it just, neither one of us ever got a chance to work at the beach or live at the beach. So my definition of what failure looked like I was going to lose my modest net worth at that age. I'd been in the Army for 5 years after graduating from West Point, and I'd gotten sort of a late start in the business world. So that didn't seem like it was that big of a deal. I would just have quality of life.
The money was never that much of a problem until you had lots of it taken away, right?
Yeah, exactly.
What were the things that came up for you when you spent a week on that book, on that one line in the book, "It's not about you"? What were the things that came up? What were the questions that you started asking yourself when you read that line, "It's not about you"? And what were some of the answers to those questions?
You're going to make me get deep, aren't you? Well, bluntly, it was my incredible mother had told me the exact opposite my entire life. I was one of those kids who had the perfect mother who made everything about me, but did it in a way that, where I wasn't spoiled, I don't think. I think I was very well grounded by my parents. But it was about me in high school, and I have a younger brother. It was about both of us. Their whole lives were all about us and our ability to do anything we wanted to do with our lives, and to do what makes you happy and pursue it because you're capable of doing anything. And I believed it, and I had limited competition in my tiny high school, honestly. So I was well grounded. I was, but it wasn't rocket science to see, man, I'm pretty successful at everything I do. And I just had lots of accolades in high school and got into West Point, and it always been sort of about me and how much could I achieve, and how much could I get out of life, and how much could I enjoy. And my parents were encouraging that. They loved seeing us be successful and living our best lives. And I can honestly say, while I've always had a very generous heart, and truly I'm a generous person at my core. I had never had anything to be generous with. My success was short-lived with taking the company public, because it was paper wealth. We took the company public in very end of November 1999, and the dotcom crash basically started, and the markets peaked in March of 2000. And my plan had always been to sort of accumulate wealth and then I could give it away down the road. But once I'm reading this line, it said it's not about you. It was just sort of a gut punch in one way, because what I sort of sensed, it was like, okay, it's not about you. You got to help other people. And I'm like, oh my God, are you kidding us? This other stress of now I have to rebuild my financial wealth while helping other people, while splitting, providing all the time and energy that my family deserves and that I want to give them. And the book, I suggest people read it. If you're not a very spiritual person or Christian, it was it wasn't much. I didn't find it as Bible thumping as I expected it to be. And it just made me think that it really wasn't an option not to think about other people, I guess, and how that I could contribute and help others even while I'm trying to rebuild myself.
I wonder, the thought that just came to me when I was hearing you share that is that when you lost everything, you went through such a challenging period because suddenly you made it all about you. As in, I had all this money, I've lost all this money, I had so much success, I was having everything going really well, and a little bit of woe is me, and this is hard, and this is frustrating, this shouldn't have happened to me, and this is all unfair. And so it sounds like in that period of real hardship, part of the hardship was just that you were in your own head thinking mostly about you. Would that be a fair assessment?
Oh yeah, I was very internally focused on how I was going to rebuild. I will say, just to clarify, I'm not the kind of person that has pity parties for long. I'm a super ultra positive person. My kids and everyone knows me. I'm an uber positive person. I believe good things happen to good people that try hard, and that had been my history. And I really believed I would do it again. But yeah, I was sad about the time and energy I was going to have to put into it, and to start sort of over again. What was next? It was all about the impact it was having on this self vision, I guess, for myself. And honestly, I felt like I'd let down my wife. That was worse than anything. I've never been materially motivated. I like nice stuff like anyone, but I'm not driven. I'm not one of those people driven by, you're not going to find pictures of me. I've done, I'm all about experiences and memories, as you know, but it was, this detour in the plan was definitely was about me, and it made me do a lot of soul searching about me. And then all of a sudden I'm being exposed months later to, it's not about you, dummy. It's about everyone else. And you're not here on earth to live this perfect life. So yeah, it was challenging at every level. And I just can't, words don't do it justice. It was hard. Really, really hard.
I'm curious from a slightly different angle. Like your experience in the military, like specifically flying helicopters, how did that shape your approach to risk and decision making? Obviously, there's a lot to talk about on the trading side, but especially just in business, right? You said you were 27, 28 or so. You're in your late 20s when you started up the business and decided to go all in and try and make this work. You're obviously taking on a big risk, and you're making decisions based on that risk. Sometimes the risks play out and end up as much bigger headwinds than we expected, right?
Yep.
But what did you learn from the military that shaped that approach to risk and decision making? And what did you further expand on it through experience outside the military?
No, great question. I don't know that it was I learned a lot from the military, and I could certainly talk about that, but the most precise answer to your question, that what I took from the military that helped me be successful, and frankly it's anyone can use it, I guess, if you want to think in terms of advice, was that I became supremely focused in my job as a Army helicopter pilot of avoiding catastrophic failure, crashing and dying, right? Everything, and that was always present. Every single time I sat in the helicopter, or one of my pilots had a platoon of other aviators went flying, they were risking something way more valuable than any material asset one would ever have. They that you're risking your life. So you're faced with catastrophic risk every minute you're in the air, especially a helicopter, right? Helicopters aren't really meant to fly. You beat the air into submission. They don't glide. They don't crash elegantly. They're not really not meant to fly. And I think when you realize, and I did that for 5 years and was in Desert Storm and it had scary moments, frankly, that sort of further made me realize just how risky what I was doing was. When you're faced with business challenges, they seem fairly small, and it's essentially they seem somehow they've gotten bigger in some ways the further I got away from the military. But when I got out of the military, it was, who cares if I blow up my account? I mean, not like my net worth. It was, I don't know, just I had this healthy perspective, I think, that it really was about money's just money. You can reaccumulate that. You only get one life. So it made everything else seem way less scary. So two things. I think all the time about what could go wrong next. What could go wrong? I'm a very good strategic planner in terms of identifying risk and contingencies. And it also gives me the fearlessness to pursue lofty objectives, because failure is not running out of money. Failure is dying. Right? And the businesses I was imagining, that I wasn't really at risk of dying. It was just losing a little bit of money, and I was going to have these crazy cool experiences. So it's really just gave me perspective that I needed, and it allowed me to also create the skills that are just innate to me now. I always think about what could go wrong. It's made me a great trader. Not many people have been trading futures markets as long as I have and never blown up an account. I'm very risk averse. I make very calculated decisions. It's made me a good trader, but it made me a great businessman, or a good businessman as well. Though the first company, as I mentioned, I lost the vast majority of my net worth. That company did not fail. That company is alive and thrives today and is worth billions. Has 1,300 employees, and I did the right things at the time that I needed to, that were like fire myself and my staff and hire someone to replace me and ride it and teach that person our industry. So I hired a software guy to take over and learn the industry and everything that we had learned, and I stayed with it. I didn't pursue other opportunities to take other jobs. I wanted to make that company succeed no matter what. Even if I didn't make anywhere near the financial money that I was going to get, there was no way I was leaving until I knew for a fact that company would make it and survive. And I'm proud of that. I stepped down as CEO. I don't remember the exact date, but I'm guessing it was end of 2001. And I stayed with them for at least 2 more years, doing everything to help them be successful.
And then what did you do?
I left the company and decided they didn't need me. I'd done my job, and decided to figure out what was the next chapter for Scott Andrews. And at that point, because failure was not, in the business sense, wasn't that scary to me. I'd just sort of been through that really terrible personal situation, the company nearly failing. It wasn't scary to me to try something new. So I was very open to, I had to decide between, was I going to take these other jobs running other software technology startups? Because that was a pretty sought after, I guess, person to a degree. I'd raised more money in venture capital than anyone in the state of North Carolina at that time. Had connections. I think a great reputation, despite the company struggling like every company did during the dotcom meltdown. And that would have been the easy money, but it didn't answer that second part I told you that was important to me, which was, once I had kids, I had to have enough wealth and enough time. That was my criteria for success. So I couldn't take over another startup because I knew what it would take to make it successful, especially from an industry and solving some problem that I didn't understand. So how in the world could I possibly and my wife said, no way were you going to start another business, kind of thing. We were done with that. But I took the other part of all that, and that I learned, because this is very important, was that in the crashing of the stock market, because it wasn't our stock crashing, it was everything crashing. The NASDAQ, as you may or may not know, lost literally 80% of its value in 2 years. 80%. Can you imagine if the NASDAQ lost 80% of its value right now? Well, I promise you, it felt very similar. It was something so unfathomable that no one could ever expect. And what I learned the hard way, and you may know this because you know a little bit about my current business, I wasn't remotely diversified, and I could have been more diversified. I had other options and things I could do. When you're CEO of a technology company, you have a lot of clout, and I had lots of interesting opportunities to diversify in many different ways. Some of that paper money, and they do very creative. Wall Street's very good at creative mechanisms for swapping stock without making transactions on paper. I'll just leave it at that. So they're just ways that these investment banks take care of their CEOs. And I was very focused on our company and overly focused on a very narrow sliver of technology stocks that were all dotcom booming companies. So I learned the hard way what diversification looks like, what it should look like, and I learned exactly what it did not look like. So that was.
So you don't have all your net
lesson
worth
learned.
in NVIDIA right now, I'm guessing.
Have all my net worth in what?
In NVIDIA right now?
No,
I'm just teasing.
I do not. Exactly.
So during your journey, you've just mentioned that you were deciding, okay, what am I going to do? I can't start up another business. Even if I wanted to, my wife wouldn't let me. I'm not going to go down that path again. I want to have more time, but then also obviously make money. Is that when you decide to go down the trading route?
So yes, but it was not quite that clean. It was while I looked for the ideal job that would that I could leverage my skills, leverage everything I'd been through with my first company, SideQuest, and provide for my financial needs and flexibility. While I looked for that job, I would start actively managing my capital because I didn't trust anyone on Wall Street anymore. I didn't trust advisors. I had many advisors and lots of bad advice through that dot-com crash. And I had become, as it all turned out, I became a committed, independent, self-directed investor. I was going to manage my wealth on my own. So while I looked for jobs, I turned it into a full-time hobby and started having some success. And I had some success in retrospect with just random luck timing the market. But I knew that there were smart ways to do it, and I needed to research how to time the market. And everyone says, oh, you can't time the market, but I knew that wasn't true necessarily. Most people can't time the market, which is still true. But I know my tenacity, and I knew I had resources at my disposal. I had the access to the best software development talent in North Carolina because we'd hired most of those people. My company was 500 and some people. So I had resources. So I ended up hiring part-time. Actually, he was the guy that helped me build the company to begin with, our first technologist. I hired him. I said, look, you're in the same boat I am. Let's figure out how to time the market. Use your code, use my creativity, and use your coding expertise and see what we can come up with. And let's just measure everything mathematically because we were both math guys. And while we started, it took much longer. It was much longer and harder, but I knew I was onto something, and I just became very passionate about leveraging my skills and creating a company. So while I was sincere when I told my wife, I listened to my wife. I wasn't going to be trading for a living. I wasn't going to try to do that. It became apparent that actually that was an option, and I had to do a little selling. But there was an opportunity for. I said, if I can prove this out further, then I can, in terms of my trading, market timing, success, and prowess using math-based, statistically based methods, then that's something that would be universally appealing to everyone else that lost, most of their net worth or 80% of the net worth during the dot-com crash. It was a massive market. So I'm like, then it sort of came, all of a sudden I realized that this really could be a business that would sort of sell itself, because all it takes to sell a strategy is, proof that you've been successful with your own capital. So that's what sealed the deal on the last 15 years of my life.
So a lot of listeners to our podcast tend to want to make really clear career decisions. They want to go, you know what, I've got a career decision I've got to make at this particular junction. Either they're sick and tired of their current job, or they know they need to make a career change, or they're not confident in the future of their particular industry, or maybe they're coming back from a long maternity leave, or whatever it is, or they've been made redundant, whatever. They're trying, something's happened or changed for them, or their perception, which has meant that they need to make this career decision. So I'm really curious a little bit more about how you made the career decision, because you were a sought after commodities and you had built up a pretty impressive business. You had raised all this funding. A lot of people would have wanted you to come on board and do that, and you decided, that's not quite in line with my values because I need to have more time for my family. There would have been other options for you as an employee. You would have been going through all these different options. You could have gone and sold ice cream on the beach, right? But that's not enough money. There's enough time and not enough money. And so you had all of these different considerations to take into play. How did you make the decision to identify? Well, firstly, how did you identify the right options, and then how do you make the decision based on those options you identified?
This might sound corny, but hopefully not. I literally created a simple spreadsheet, and I laid out the two career paths. It was a very binary and crazy decision to leave the corporate software world and try to do something, start over. So, and I did this with my wife, and we sat in bed many, many nights comparing the traditional route versus starting over. And I had all my friends, the other founders of my company, they said, "You're crazy. Starting over, you're at this age of 30, what was I then? 37, 38." But when I laid out what we did was, I'm very mission oriented, and did a very good job of, and I know myself well, and I know what I wanted, and I know what we needed. And I laid out all the different measurements of jobs, right? Beyond just, do you have enough time and do you have enough money, but are you doing something that you enjoy, that is intellectually stimulating? Yes, I've been fascinated by financial markets my whole life. I didn't have money, but always wanted to participate, from a very young age. Was it something that I felt like I was well suited to achieve? Yeah, my contacts, you're right, I knew software developers. One of my best friends in the world was one of those developers, and was also a very successful investor. I knew, was there a clear need and opportunity? Massive need, right? I mean, who doesn't need better protection from volatile markets and bear markets and so on? So when I started going down the list of criteria, both personal and objectively about the business, the business that I was imagining serving other like-minded investors with something that could help them do all those things was just it was more exciting. It was a better fit for my skill set. And when I make up my mind, when I connect the dots on something, I knew that I would have a better than 50-50 chance of making it work. And I sort of felt like, worst case, it would be a lifestyle business. Okay, so I don't get all the wealth that, get to the next level like I want it. But with any even modest success, it could really do a lot more than coming into. And I was comparing it versus taking over. The opportunities I had was like to come in and get 5% ownership of a struggling software company and to try to turn it around and raise financing and so on. They were like between 3 and 10%. And I'm like, wow, my heart and soul is worth a lot more than that in any business. And and I want to be clear, and I hope I haven't come across as some egomaniac that's thinks he's all that, because I am not. I had as I told you, I came from meager beginnings, so I did not have much competition. And I'm not the smartest guy in the room, but I am relentless when I make up my mind about something. I am tenacious is probably the way that most people describe me. I just can't stop. I obsess over ideas and opportunities, and failure, I think, as we were talking about before, doesn't scare me. But on the same token, it's not an option. So, because I believe if it doesn't scare you, then I can keep trying. No reason not to keep trying. And if you keep trying, you'll eventually figure it out. And that's sort of just been that's what we did in our first business. We went through, it was really hard. And then, so it just didn't scare me. It just didn't scare me to take the leap again.
Amazing. Okay, so if I feed back to you what I just heard, you went to try and basically you looked at your various options. There were two main ones you were looking at, but then you looked at it based on a bunch of different criteria. And what I heard from that is time or flexibility, how much money you can make, how much you can enjoy it, is it intellectually stimulating, what's the probability of success, what's the opportunity that's there, how does it impact your marriage, how does it impact your relationship with your kids. Does that kind of cover it? Are those the data points?
Yeah, I've got the spreadsheet somewhere. It'd be interesting to compare, but you're pretty close, I know. And it was about 10 things.
Okay. And then you
And I did it
decided
with
to
my
just,
wife. And the other part of it, I mean, just for those in relationships, it's important to have, your partner has got to be on board. I want to be super clear. I'm married, I don't know about grace of God, really, but I married someone who had more confidence in me than I had in me at times. And that allowed me to stick through the tough times and to take things that would be considered unreasonable risk at different phases in my life.
how have you balanced that confidence and humility? Like particularly when dealing with successes and failures in your life.
Well, most of what we've talked about have been the successful parts of my life, because there's still a whole. I've been doing the current business for 16 years that we started. So that decision, there was I'd say probably a 10-year period where it was very humbling, to say the least. Not all of it. I had a lot of initial success. With this business that my wife and I agreed upon. A surprising amount, frankly. I did my research. I knew what the market wanted. I built, I don't know, I'm a math guy, and I just knew, and I had help, and I had the resources to hire people to help me. I hired a couple guys, and we were able to build strategies, and I obsessed over the markets for several years. I built strategies that actually worked in live trading right out of the box. And I'm telling you, that was just that was a lot of luck. That what I built happened to align with what the market did, enough to give me success, enough to attract other resources and talent and get the company going and build out strategies that would work in all markets. So had I stumbled out of the gates, I wouldn't be here now. So we had a lot of success early on, so much success that I had clients begging me to literally manage their capital for them. I wasn't interested in that. So then they said, well, why don't you trade my money for me? And I said, well, I don't want to do that. So what if we built automated strategies that you could use on your own account? And so yeah, that'd be really cool. If you could automate these strategies and license them to me, that would be something I'd be interested in. And we were having a lot of success, and people had made a bunch of money sort of manually executing our strategies. I was sending signals to people, sharing my simple signals that just happened to work really well in the financial meltdown of 2008. And then the recovery period afterwards. Had so much success and I knew to build what they were sort of wanting and what I was sort of imagining would take millions of dollars of investment that I didn't want to provide or pull out of my own trading accounts. So it just made sense to, I don't know, I think I asked the investor just off the cuff, I said, or actually the investor offered it, the first one did. He says, have you thought about taking money from some of your clients? I said, no. I said, who would give me money? I've never met really any of these guys. He said, I would. I said, really? I said, how much? And he said, I don't know, 50,000. I said, dollars? I mean, I really was a little stunned that there was no real direct personal relationship. But he said, yeah. And I sort of laughed it off. And then literally a week or two later, another client having a similar call, same topic came up. He said the exact same thing. Well, I asked him, I said, would you be open to that? He said, absolutely. So I literally raised from our clients $1.5 million, went on to expand it to my early investors from my first company, SideQuest. And we changed the company name to InvestorQuant and raised $3 million in a very short amount of time to build out these automated trading programs that could be enabled in individual client accounts. So like a hedge fund for investors' accounts. And that was all the good success. That's when I was the rock star. And then,
and when weren't you the rock star?
Well, right after I took the money, we had financial plans to, in order to raise the money, I had to show projections on how quickly we would sell the automated strategies, how fast the company's revenues would grow, how fast the bottom line would grow. And I just assumed it would be sort of like a rocket ship, like our first company, and it wasn't. And I think I made the first number barely in the very first year, like half year after I took the money. And then we did not hit another number in the pro forma for 3 or 4 years, meaning it was, okay, that didn't really work the way we thought. So in fact, what we did was we tried licensing individual strategies and allowed investors to create their own portfolio of discrete strategies. Of course, that didn't work because they only licensed the very best strategies that were all very correlated and had made the most money last year. And nothing makes money every year. So they were always chasing performance, even though we were guiding them like that doesn't work. I'm telling you, and I'm telling our clients to diversify, and they're not doing it. So then I realized, okay, we've got to pivot the company, and we need to manage money professionally. I needed to bite the bullet, and we did. And that was a arduous process to become registered Series 3 traders for commodities and futures. And then to basically shut down the retail business and to manage money professionally and deal with family offices and uber high net worth clients. And to make that work, we'd done our homework. We needed to get to 100 million in AUM as fast as we could. And we got about halfway there before there weren't any more people willing to take a chance on us. And we needed, without us having 3 years of life history, and the larger firms couldn't invest but so much. And we just ran into these obstacles that we didn't anticipate, that we had to regroup. And I realized we got sort of stuck in a hole where we could not get the company profitable. So I pivoted for the third time back to, I had no choice, but we needed to have more strategies, better machine learning models, and we had to build an internal platform. So our developers switched from building algorithmic trading strategies back to building a world-class research platform that could accelerate sort of our speed to expand our offerings and build better strategies, frankly. So the board was not happy with that decision, but it was the only path we had. And I really thought we could license our strategies at that point for at least to get the company to break even. Wrong again. So I was 0 for 3 on my first 3 financial models with our shareholders after I raised the money. And those were some dark days, because it got to the point where I used the investors' money to build up our team. And I had a number of employees that liked getting regular paychecks. So it put me in a position of having to use my own capital to bail the company out. And that was tough I believed. It was tough because I was starting to lose confidence in myself, that I had basically not hit any of my numbers. My wife knew that, and she says, "You want to take our money and keep this going?" And those were, in fact, if I think about it, I think I may have misspoken. The hardest time we had was not when we went from being worth tens of millions of dollars to single-digit millions. It was that period there where I was facing imminent failure at the age of 48 or whatever, 50. That's a tough age to realize you may lose everything, or at least in terms of it, because it's just different when you're 30 or 35 versus 50. And those were probably the darkest moments I had, and we had, because she started doubting me for the first time, as she should, right? That's it'd be irrational not to. And we have a very close relationship, very open, and I didn't have good answers. It was just sort of you just had to. I really believed in what we were doing, and I knew we were super close. We just hadn't figured out the model. I had strategies that have worked for 15 years, some of them almost 20 years. The problem was I had not traded them aggressively enough because I was risk averse. Remember, I avoid catastrophic failures. And though I'd done well, it was nowhere near where I was trying to go and what I needed to really deliver my personal sort of to achieve my financial goals and provide what I thought my family deserved and what I set out on a mission to do. So I married an amazing woman. Yeah, and we put the money in.
I have two main questions about this. Firstly, it's more of just a comment. You're expressing with gratitude that your wife lost confidence in you.
Oh yeah.
You're expressing with gratitude that she started becoming very hesitant about the decisions you're making. Is that right? Am I hearing that correctly?
Yeah, and I mean, I wasn't feeling gratitude at the time, but it was what was different in retrospect was she had blindly, and she would tell you the same thing, believed in me. I'm a go-getter, and I'm a good person. I'm honest, and I work really hard, and I'm passionate. Everybody knows I'm incredibly passionate, and she had every reason to support and believe, and no reason to doubt. But she started doubting me rationally, which put extra pressure on me because I just couldn't let her. It was just different, and she just forced me to double down on all of my, not double down, to double check all of my decisions, all of my assumptions, triple check, because it was going to probably be, it could risk our marriage. I was that concerned.
And that's the real catastrophic failure, right?
Exactly.
It's not even the money you're talking about. It's losing a marriage.
No, exactly. And remember, I emulated my parents, and Dad married the trophy wife, and they're still happily married. And they're celebrating the 60th anniversary this year, and that's hugely important to me. Like the idea of just not making it in my marriage, for me personally, just because of the way I was raised and my values, and there was just no way I would ever leave her. But I realized there was a chance she would leave me, and she never threatened it. She just disagreed. It didn't make sense. And she started, talking to her friends, and her friends, she's sort of telling them what's going on. And I can tell because she's starting to say things that didn't sound like her. And they're asking these tough questions coming out of my wife's mouth and really challenging me. So, but in retrospect, that did force me just to think through some things and not make the catastrophic mistake. And it made my plan better. I was ready to throw in big chunks, and we didn't need big chunks. I just needed to make payroll a month or two here, a few months there. Needed to go without a paycheck for a long while. But I was able to sort of, we bootstrap. We started bootstrapping the company again, and nothing like running out of money to focus a firm, a small startup. And we were not a startup. That was what was frustrating. We've been doing it for a long time. But I brought on overhead, and I'm intensely loyal to my anybody that works for me. I'm demanding, but I'm also incredibly loyal. And I wasn't about to let anyone go. And we weren't running fat either. We with excess. We were a small, lean company, but they were expensive, right? These are world-class software developers and quants, and the success of the company, the struggles had been purely strategic. Remember, I started off by saying, I don't know if you remember talking about some of my strengths, I think I became very good at strategy, avoiding catastrophic failures. Well, it didn't. I almost didn't avoid the catastrophic failures in this venture, but we bootstrapped, and the company turned really rapidly, and we were back on track way faster than I would have imagined, and even beyond in some ways. So that was, I guess, realizing. But by the time I got to Pivot 4, I knew what would work. I mean, like knew what would work and what would not work. And the little mistakes I made were really big mistakes. So all we did was pivot back to, we were on the right path when we raised the money of automating strategies for investors. We just needed to put them together and sell them as packages of strategies. Because what people really wanted was, they wanted investment programs. They wanted a turnkey solution that they didn't have to worry about. They didn't have to make decisions on what would be in it, what to turn on, what to turn off.
Mm-hmm.
And managing money professionally, I mean, we'd been doing this so long, and even my own, I knew how to do that. So we just packaged them and sold them back to the people who we could help the most, which was very gratifying, because I never wanted to help the ultra wealthy make more money. I was back to helping people, everyday investors, which is always something that sort of turned me on to help make real difference in people's lives. So we went back to the retail market with these algorithmic trading programs that could be used as investment solutions for investors, and it just took off.
A lot of the time when you try to avoid catastrophic failure, which seems like one of your strengths, avoiding catastrophic failure usually means you end up taking on less risk. Is that right?
Yes.
Or not necessarily?
Well, yes. Well, not necessarily, but usually means you're taking on calculated risk, highly, highly calculated risk, not always less risk.
And how did you transition from wanting to avoid catastrophic failure, and the way you were trying to do it was, I think you said you just weren't trading your strategies aggressively enough. Like you had great strategies from the beginning, you just weren't trading it aggressively enough. That sounds like taking on more risk, which sounds like getting closer to catastrophic risk.
So maybe I'm misspeaking. So when you fly, especially helicopters, there's no way to lessen. I mean, you can lessen the risk, but you're still facing catastrophic risk at all times. So it's subtle. So in the business sense, if you're going to create companies out of thin air, out of solutions you imagine between your two ears, you're creating something that doesn't exist, right? And that's what I've done both times. And that, by definition, means is very likely to not succeed. And when I say I think I was good at the strategy of minimizing those risks, I am. And just like pilots do, a great pilot isn't defined by just one skill. A great pilot is defined by being great at about 20 different things in scenarios. And the same thing with entrepreneurs. And the strategies, I kept improving the strategies every time. So time was my friend. I kept improving them, getting more comfortable taking on more and more risk. And I really realized what the breakthrough was when we put the strategies together professionally instead of licensing them individually to investors, and we went and became professional investors and registered as Series 3 traders, helping these family offices. We put together portfolios of strategies, groups of strategies, and sold them to manage all their capital. We had to, because they had so much money they wanted to put to work. But we just couldn't get the company big enough that we could overcome their mandates of not. It was just a number of different issues that we needed to have 3 years, and we had to. They couldn't be more than like 10%. So we couldn't really go after the big guys until we had grown more slowly, but we couldn't get profitable fast enough to do while doing that. So we pivoted back to the retail guys, and the groups of strategies allowed. And retail people do want to take on a little more risk. But they didn't have to. We just sort of skinnied everything down into smaller groups of strategies and found the sweet spot. So
I think that's a really important point you just shared, that you can't avoid catastrophic risk. So your focus hasn't been on avoiding catastrophic risk, it's been on minimizing it.
Yes, well said.
Okay. I have a million more questions about that, but I feel like there's some other areas to explore. Like you've mentioned a lot about how your wife has been your key support.
Yep.
You mentioned your current business partner who built up the other company as well. You've mentioned your dad. You mentioned how your mum's always been super supportive of you as well. But like, what role has mentorship played in your journey? How have your mentors really helped you? What makes a good mentor? How do people find mentors?
So the first mentors that I had were when we started trying to raise venture capital, actually angel investment capital. I don't know if you're familiar with the term, but angel investments, right? Where you, instead of getting money from a venture capital firm, you get funds provided by individual high net worth individuals who provide the first seed capital, say $1 million or $2 million or whatever in your business. That's the traditional model. Then you scale that as you show further success. You go get venture capital from firms and groups of many millions of dollars, and then you can go beyond that. We we had a professor. So the very first mentor we had was he taught entrepreneurship at University of North Carolina. A gentleman named Dr. Raleigh Tillman, a brilliant guy who he taught us the class, but he also mentored us on the side. We would go see him, present our models, our business plan to him, and he would ask tough questions and give us suggestions. And he was the one that gave us confidence. He basically said at lunch one day, after mentoring us for maybe 6 months as we built our first original business, the SideQuest business plan. What are you waiting for, guys? You've answered all the questions. You've got to. It's time to go do it. So he was a professor. The next group was when we were raising money from angel investors. So we went to raise money from investors, and we got shot down for 2 years. And I'm not exaggerating. We struck out. So we were writing checks to employees with credit card checks like you get in the mail. Seriously, crazy stuff. Paying with our credit cards to keep the few employees we had, and we were desperate, and we used various entrepreneurial resources for angel investors, and we stumbled on one angel investor who says, I really like what you're doing. I want you to go meet these other two guys. And basically, these three guys were all good friends. They invested in a lot of deals together, and they sort of said, you need us to help you be successful. We're going to be your board of directors, basically. And they just took us under the wing. They were successful entrepreneurs that were maybe 10 years ahead of us in age. And for whatever reason, they believed in me. And as I mentioned, I had 3 other co-founders in that first business. So those guys were critical. It's like you can't replace the mentorship you get from the wisdom of deals. Like at one point, I remember I'd gone to the West Coast, and we were running out. We'd raised our $700,000 in angel investments from maybe 20 small investors, 3 of whom were those guys who were big investors, but it was still a little bit of capital. And we needed to raise venture capital. And we were striking out in North Carolina, all up and down the East Coast. No one wanted to touch us. It was too risky. They didn't see the vision that we were sharing, which was the internet was going to change everything. It was going to change all B2B companies. So I told the team we came to the plan that I was going to West Coast, and I wasn't coming back until I had a venture capital deal secured. And I flew out there and starved for about a week. I finally got a venture capitalist to commit to me. He said conditional upon another venture capital firm out of, this was a big firm. They'd just done eBay. It was a firm called Benchmark Capital. And correction, I'm screwing this up. No, I'm not. Benchmark said, it doesn't matter. Benchmark was one of the big names. They said conditional upon their firm up in Boston. I had to go see them. And then Boston said, well, we can do this, but it's going to be like 3 months. And we're going to have these 2 world-class names behind us. And I said, okay, we can survive for 2 or 3 months as you go through due diligence. No problem. So I came back, told the board, these mentors, that that's what we're in our team, that this is what we got to do. These guys are going to give us 5 to 10 million. These are the biggest names in the industry. It's a no-brainer. And they said, well, wait a second. What about that other little firm that is now saying that they'd be interested in investing that we heard about that you discounted so quickly? I said, well, they're just these are small guys out of Charlotte and Atlanta, and they're only interested because they heard the benchmark was interested, which was true. And they said, yeah, but they're willing to go right now. I'm like, we're going to take money from these little guys, these small venture capital firms, not nearly as respected as the two firms that are, we just got to wait 60 to 90 days. And that's when the mentor said, you're damn straight. We're not going to wait. You got a bird in the hand. You've worked so hard, and you're going to turn down $5 million in green capital. It's the same color as what these other guys are offering, just because their names are not as big. So they literally said, you will meet us in the office. We're getting on the phone call, and Scott, you are going to sign that deal if they agree to all of our terms. So I told them, that's what we did. We sat down and said, we'll only sign your term sheet if you agree to all of our terms. And I absolutely did not expect that they would say yes. And they said they would. And they did. And we did. And we signed a deal with two little-known venture capital firms for our first 3, 4, 5 million. I remember the exact amount. Absolutely saved the company because we could have very well not gotten through due diligence. We were already running on fumes. And these other guys stepped up. They were fantastic. They were more. They introduced us to 5 other million, to a total of, we ended up closing $10.5 million in venture capital on top of their funds.
So all these mentors you've had, it sounds like they were directly involved, except for maybe the lecturer, right? He just wants his students to succeed.
Correct.
But then it seems like most of your other mentors have all been people who have invested money in you already, like tangibly invested in your success. Is that right?
Well, yes. Starting with my father, of course. But his advice was always, go ahead.
Yeah, what was his advice throughout all this?
His advice was always do the right thing, be honest, don't doubt yourself if you believe. But it was never, he's a small time business guy. I mean, he's very successful, but he never raised capital. Every dollar he ever got, he made himself. So he couldn't help me on the fundraising. The fundraising was key to anything in financial technology or internet technology. It's just super expensive, right? Those businesses take outside financing typically. Mm-hmm. So.
Okay. And then the other side of all this mentorship kind of stuff is having the support systems, like your wife, you've mentioned a whole bunch of times, and during tough times. And obviously support is not always just, go on, Scott, I believe in you, you can do it. It's sometimes, are you sure you can actually do this? Are you sure this is smart?
100%.
How the people who are listening to us, how can they cultivate a strong personal support network?
Well, anytime you want support, it starts with having an open, honest relationship, right? So for all of my occasional mistakes of letting my ego get the best of me and, being full of myself and bravado, I really try to do a great job of balancing just being honest, being real about the risk and the opportunity. And to me, all decisions come down, this is the way my brain thinks. Probability of success, what's the payoff? Probability of failure, what's the loss? Mm-hmm. So that when you help people think in your terms, and I'll admit I'm naturally, because of my passion and my ability to convey and distill complicated topics into sort of simple layman's terms and then put them in terms of probabilities, it's all about an expectancy. The things I've always done in my life, the potential payoff for anything that I've ever pursued, it was way bigger than what I would potentially lose. And so for building your own network, I think people embrace you. When people embrace their loved ones to a point, no matter what, but there becomes a point where they have to also be able to understand. So my success isn't just because I've had this awesome support network, but I'll admit I was very effective for my own personal credibility, integrity, passion. I was able to convey these stories into something that people could get on board with, and they knew that I was willing to fail, and nobody wanted to get in my way. They just wanted to help me be successful. And I think in retrospect, a lot of people have respected me because I've been told no so many times. People, I think, have learned to, they respect the fact that my commitment and passion. And it's not just, I'm not just desiring to be successful. It's way more than that. And I think people see that. So if that's not your style, I'll say this in terms of maybe sharing a nugget of advice for people that are looking to build their support networks. You have to be realistic about, the support you're going to get from your family and loved ones. They're going to always be there as an ear, but they're not going to always agree with you. And that's okay. But you should also work on your ability, that's the easiest group of people to practice your pitch, right? When you're trying to achieve something. And I'm not just talking about startups and running businesses, it's anything, right? Why you want to go to business school, why you want to get your PhD, why you want to quit your job. Learning how to compel people is a life skill to get what you want out of life. It just is. And it doesn't matter. You don't have to be a flashy salesperson at all. In fact, those are often the worst salespeople, in my opinion. It's the people who passionately believe in what they're promoting, and they have a reputation for being high integrity. Those are the people that sort of get what they want.
This is amazing. Tell me if I'm hearing you correctly. There's this element here of people are often saying something like, "Oh, my loved one or my spouse or my investors or my employer or my boss or whoever doesn't believe in me." And something you just said almost alludes to this idea that, well, if someone doesn't believe in you, you're not compelling them to believe in you. So what do you need to change in yourself first so that you're the type of person that they believe in, 100%. As opposed to blaming them?
Yeah, it's not them, it's you, dummy. I mean, to me, that's very obvious. That's your job.
So that's not obvious to most people, right? So how are you happy to unpack that a little bit more? You can throw in some life experience, or you can just share more about this perspective, or maybe even how you've taught your kids this. Imagine you see one of your 4 kids. How old are they now, by the way?
Ages 18 through 24.
Okay, so imagine that one of your 18 through to 24-year-olds making a career decision or getting rejected from a job offer, or struggling with their marriage or with their spouse or whatever, and they're going, "Oh, it's just so unfair," and they don't believe in me, and blah blah blah, that kind of stuff. How would you help them see it? How would you explain it to them so they actually see it's not them, it's you, dummy?
Yeah. Well, it's you're catching me. I've never really thought about this. To me, it's so ingrained in who I am and the way I was raised and the way my wife thinks as well. Every relationship that works has two parties with a vested interest in the outcome, right? That's if one party isn't vested in it, it's not going to work. So you have to start with it's got to be a relationship that's of mutual respect. And if it's not, you're screwed. It's not going to work no matter what you do. So it's all about having a certain amount of respect of each other's opinions and views and so on. And then it's about asking questions. When you share your view and they don't understand, my wife has taught me to ask questions instead of berating them. I could be a little bulldog, but I have learned with many years of living with her, it's better to ask questions. What don't you understand? And then it's a communication. It's never someone else's fault. So I guess maybe at the core, I think I know what I'm struggling with. I come from a background of extreme personal accountability. Your word is your word. It is your responsibility. No one is responsible for me and my actions. There is no, my brain is not like everyone else's, but that's not an excuse. I've got ADHD and I got all kinds of things going on. As I realize now, no, I was never diagnosed at a young age, but there's no doubt I've got things now that I should have been diagnosed. So there was no excuse. I couldn't blame anyone else. I couldn't point to anyone else. I was raised in an environment without excuses. They weren't allowed. And frankly, I was also blessed. I didn't really have many to make, right? I had two loving, supportive parents, had enough of everything growing up, and they pushed me, just everything. So I would never blame anyone. If I try to get someone, so I'm not answering the question well, you can tell I'm struggling, but my children, that's what I would tell them. I said, it's no one's responsibility to do anything for you, to believe with you just because you want them to believe with you. It's on you. And I've always promised my kids, I will love you to the end of the earth and end of time, but that doesn't mean I'm going to agree with you. In fact, to the contrary, I'm going to be the first person to disagree with you, because a lot of people won't disagree with you, but I will, and I'll do it in a loving way. But I'm going to let you know if I think you're wrong, or at least if you're missing something to consider. So I think it comes down to communication and respect and honesty.
Communication, respect, and honesty.
You can accomplish an awful lot if you can get those three things figured out, right?
Mm-hmm.
And then
definitely.
It opens up the door to everything.
That's a pretty powerful message. Have there been, to change tack slightly, I'm still curious about if there are any habits or routines you have found beneficial maintaining focus and motivation, and especially during those periods of uncertainty and challenge. Have there been any habits or routines or specific things that you've done consistently that have helped you not get stuck in those moments?
Exercise. I walked more miles in those dark days than you could imagine. It was, for me, that worked to clear my head and help me think clearly, getting out of the house, rain, sleet, or snow. Clearly, your health is important. I went through some of my health issues were, so I'm actually bringing up another negative. I had COVID and was hospitalized for 6 days in 2020 when our business was at its one of its bottoms. We actually ran out of money a few times along the way, and I had to put money in. And that gave me some much needed perspective, but you've got to take care of yourself. In terms of other habits, exercise and balance. You can't work all the time. You've got to find ways to turn off your brain and enjoy life, because there's a lot more. Like we said before, there's a lot more to life, and a lot of worse failures than running out of money or not achieving some interim goal.
What are the ways you've found to turn off your brain from work, that is?
Yeah, it's not easy. Clearly, with my family and kids, engaging with loved ones, it's not just my family and my own kids, my brother's kids, vacationing, and I don't know. It's I'm very good at. I'm not great, I will admit, but I'm pretty good at walking out of the office and turning things off for the day. So, but here's the key. So the only way I can turn my brain off is if I literally give 110% for the day. And I felt like I was as productive as I could be. I accomplished all that I could accomplish. And you just learn this over time, that you learn what that amount is that will allow you to sleep. For me, if I felt like I goofed off a little bit that day, or didn't do something or research something as far as I should have, I just can't sleep. So sleep, I love my sleep, but I don't get it when I'm not doing my best work. So for me, I've trained myself to put in enough effort that I have to sleep and that I can sleep.
I wonder if that's why people end up doom scrolling at night, as in like scrolling through social media or watching YouTube or the news or whatever it is.
Yeah.
Well after what should be their bedtime.
Yeah, I do.
sleeping
In
time.
fact, that's a good point. So I read the news. I don't get caught up with the news often until the very end of the day. I'll catch up late at night. Wife's falling asleep, and I'll scroll through and just distract the brain a little bit to get off of whatever my current challenge is. But I don't turn off. Well, here's the other thing. I've learned how to sort of. You ask great questions, Harry. I've learned how to sort of break complex topics or things that challenges I have into lots of little pieces, and I'll just work on little pieces here and there. So like I may have to get to the answer I need. It may take, I don't know, 6, 7, 8 little answers to figure something out, and I'll break it into bite-sized pieces that I can literally just sort of think about when I'm using the bathroom, when I'm taking a shower, when I'm going to the grocery store. And it allows me to, I don't know, be productive in ways that mostly consume most of my brain, but sort of go in and out of little tough topics. And I don't know, I'm a master iterator. I iterate everything over and over and over, and it just allows me to make tiny little steps. So all my successes have been, and failures have been the result of hundreds, if not thousands, of little decisions and analyses that I've made along the way. So it can become overwhelming though if you make it too big. So you got to break them into small bite-sized things that you can work on just about anywhere, anytime. I'm a big thinker. I think a lot.
Yeah, I like that. You chunk down the ideas into all the big things you've got to do into smaller bits. And then it doesn't feel like this massive mountain to climb. It just feels like 1,000 steps you got to take. And then you just take those 1,000 steps.
Well,
And
it's
that's much less daunting for
well,
you, right?
you don't even need you don't even need to think about the 1,000 steps. You just need to take
Just
one
one
today.
step at a time.
Yeah, or one on this topic. And I do keep. I'm a big list. I track tasks and activities and list on my phone relentlessly. My phone's always with me, and I have many different categories of topics and people that have to-dos that I need to communicate or things to communicate and share with them. So I'm pretty efficient in all of my communications throughout the day as well.
There's something which I heard from you in one of your, I think it was in one of the podcasts I listened to. You had a 90-10 rule for traders. And I'm curious about this, not just in terms of trading. Obviously, I'm curious about trading because I'm a trader, but in terms of life in general, right? Like if I understood it correctly, we're talking about 90% of the effort should be spent on studying and researching rather than the trading, right? Like 90% is for the
100%.
preparation and
Correct.
creation of, and then only 10% is for the execution.
That's
Is
exactly
that something
right.
is that something you've been doing in everything in life, not just in trading, but everything?
Well, in the business world, that was sort of a changing theory. And when I was getting my master's, that it used to be you would research everything completely and build your business plan and then present it and raise money. And that was starting to change in the 90s, where there were philosophies of iterating that you don't want 90%. You want to have about 60% figured out, and you'll figure out the other 40% along the way as you iterate the business. And frankly, at West Point, they taught us that as well, that it was actually the 60% rule. When you have 60% of the information, enough information to make a decision, you make a decision, and then you adapt and overcome.
Even when literally catastrophic risk of your life is on the line?
Yeah. Yeah. In fact,
Yeah,
even when
wow.
you're risking not only your life, but the lives of thousands of soldiers. It was, I know there was, Eisenhower made, I think, some famous quotes along the lines during World War II and D-Day and the planning and all that. It works. The business world is more like that as well. Trading is different. Trading is where the trading execution that's easy. That's not even 10%. That's, in fact, it's,
Clicking a button.
as you know, it's, for me, it's 0% now. And our clients, there is no time spent on the execution, but everything is around researching the edge and understanding the edge, understanding the weaknesses of it to create the best probability of success. Because even though what we do is statistically driven, there's still judgments on how many standard deviations, is acceptable for like a drawdown, right? People have different views. There's still judgment calls and all of that. So, but I think the effort, the problem is most manual discretionary traders, most retail traders, and frankly, I've trained hundreds of people over the years before we became 100% committed on automatic trading. The traders who just never make it seems to me, are the ones that just trade it. All they want to do is sit down in front of the charts and just trade and try to interpret the charts and the price patterns and so on. And I do think there's 0.1% savants out there that can maybe do that, but the average person has very, very little chance to do that. And I didn't do that. Everything, I came right out of the box, not trained on Wall Street, self-taught. We took a completely different approach. We just identified factors and indicators that we measured the probability of success, and then we understood the logic behind them, and we put a bunch of those different factors together, and when they align, or the majority of them align, we mathematically have an edge, and it's proven itself out over time. So all of our work has been on research. It's been more like 99% in research and 1% execution.
Interesting how that's different, right? I remember John Carter talking about how the things that, maybe it was Tom Hoggard, talking about the things that make people successful in trading is pretty much the opposite of what makes them successful in their careers or their business. He gives the example of, it was definitely Tom Hoggard. He gives the example of people wanting to double down in their trading. It's like, well, if you want to double down on a trade that's going against you because you were wrong the first time and you want to keep being more and more wrong, great. If you do that in your career, well, cool. Doing it in your career is great. Doing your career means that you're going to be putting in more focus, more energy. You're going to grow. You're going to find more opportunities. You're going to get that next opportunity. It's going to be wonderful for you.
Right.
If you choose to just double down on your career and the path you're taking, like what you shared with all the entrepreneurial efforts and endeavors, but if you do that in trading, you're just going against yourself. That's the way to bury yourself alive.
I agree with that. One of the greatest, another example of that is, and I hear people talk about all the time, is discipline. And a lot of people say, "Oh, Scott, you're West Point military officer, so you've been successful because you're so disciplined." And I always surprise them. I say, "No, I'm here because I knew when not to be disciplined." It's discipline kills you when you follow blindly a trading strategy that you believe should work, and you blow up your account. So yes, I'm extremely disciplined, but the problem is most people that attempt to become self-taught traders, they learn some strategy, and their trading mentor, which I'm not a fan of the whole industry, it's full of charlatans and BS that's not real. But they're told you must follow religiously these rules to be successful. And every time that you're not making money, it's because you weren't disciplined in some aspect of it. And I'm telling you, that just isn't, you can't work. It's not like that. There have to be boundaries for when when something's not working, and when it's time to change gears, try something different.
Yeah. That's interesting that you share that. What's your definition of discipline? When you say that you're really disciplined, and then you also know when to not be disciplined, and you know when to execute discipline or not. What does discipline mean to you?
Discipline is following the rules relentlessly. That's just sort of the simple military. These are the rules. These are the regulations. You will follow them. You will be disciplined, even when it's
Like
hard.
to be a disciple to the rules. Is that what you mean?
Even when you disagree, right? But the rules, that works only if the rules are right. And in the trading world, it's so subjective, and it's just too much information for the average retail trader to be able to digest and make the right judgment calls, because the markets are always changing. There's thousands of factors that impact the markets every single day. We track 1,000. So what human is going to be able to digest 100,000 different factors? And it takes, you just can't do it. So discipline following your three favorite strategies your three favorite indicators is just a recipe for blowing up your account. I promise you. There's not
Yeah, I
enough
mean
context.
that's just the entry component, right? Like that's even just
Oh,
choosing when to
sure.
get into your trade. But then there's management of the trade and the exit of the trade. And then there's adjustment of the strategy as the market changes.
The only way to do that properly is to have math behind each of those decisions. It's mind blowing to me. I mean, when we started trading, it's people don't realize this, but I didn't. I tried discretionary trading for about a year. I got lucky, made money my first year, and then I gave it all back in 10 weeks, and fortunately not more. But then that's when I realized that this is an impossible game without math. And I was learning from I really believe he's a world class. I know he is a world class options trader. Was teaching me discretionary trading, but he was taking what he had spent 25 years learning and digesting it on paper, thinking it was enough of the rules to be successful, and it wasn't even close. The only way to make those decisions is to either do it for 20, 25 years and survive, maybe 10 years. Maybe some people pulled on 10 years, 5 years bare minimum, because you have to be able to get experience with all different types of market environments and conditions, bear markets, bull markets, high volatility, low volatility. I mean, there's so many nuanced contextual trading scenarios that you have to know to be successful. And I'm like, I can't remember all that. No, I don't know who could. And I certainly didn't have years, right? I was trying to create this market timing approach to the markets with leveraged instruments, and I needed hardcore math. So we just used math. We measure and still measure everything, every decision, getting in and getting out, all of our decisions, allocations, just instruments we trade, you name it, it's all measured. That's the only way to do it. And then when the math suggests that it's not working, that's when you can take some calculated tweaks and changes.
You got to have faith in yourself, right? You got to have faith in your ability to make those decisions about, is this statistically significant? Which data points do we
Well,
look
you
at?
can put up statistically significant boundaries, right? You can determine those are concrete measures that you can use. And that's what we do, because we've got multiple traders, super experienced traders on our team that work with our quants. And those are the debates we have. So, but we've put the boundaries up around sort of what success looks like, and what a normal drawdown looks like versus what a outlier drawdown looks like, and what is broken and what's not. But it's just so much more consuming than people realize, and it's a real shame, because the whole industry gets a bad reputation. All these people, and we've got doctors and dentists and lawyers and you name it. The brightest of the bright are our clients, and half of them come to us as failed traders. Airline pilots, got flying 787, incredible career as a pilot, but man, he cannot trade. He hasn't grasped that it's not. Well, this gentleman his emotions are his problem, but another one, will come to us and say, "Hey, it's not your emotions. You're doing everything right. You're super disciplined. You're just trading with 1% of the knowledge you need to have, the rules you need to have to be successful." It's just so much more complicated than people realize, and it's really not an individual trader's game these days, because the markets are changing too. So we have to go so far as, not only is it our algos have to be driven by the math, the statistical probabilities, but those probabilities have to be updated every day, because the markets change and setups that used to work stop working, and you can't be making judgment calls. That has to be automatic, and that's been one of our keys to our success. But I'll say this, maybe just to wrap it up for any wannabe aspiring traders out there: one of the keys to my success has been recognizing what I don't know, and recognizing that the markets can't be boiled down to just a few, lucky indicators. Like a lot of people, factors for making a trade. They're just way too complex.
Right. It's what you don't know that you don't know. That's the problem, right?
Yep.
There's been so much which you've shared, and I'd like to try and feed back the key points which I've heard from you, and you can then let me know if I missed something or if I've said something a slightly wrong way, or if you wanted to add something else as well.
Sure.
We started out talking about overall your definition of success. And at first, you just want to be successful like your dad. You want to be in business like your dad. You want to be in a beautiful marriage with the trophy wife like your dad. You want to have the kids. You wanted to be there. You want to serve your country like your grandfathers and uncles. And your dad was obviously in military for a period of time as well. And perhaps you had too healthy of a self-esteem, because you also shared you got that from your mum as well. And you eventually got to the point of trying to rationalize, what does failure actually look like? And it wasn't so much the success that you were really striving for, it was the chase of success while minimizing your risk of catastrophic failure. Right? At 35, you were super successful just before the dotcom crash, like successful financially. You went back to your old school, you gave a commencement speech, and you realized, well, actually, what you need to have is millions of memories, not necessarily millions of dollars, or millions of dollars worth of memories. The memories that you wouldn't give up for any amount of money, because that's what actually makes your life worthwhile. And you learned that there aren't many failures in your life if you're doing your best and just kind of simply trying your hardest. And there was that. And you realized about how much time you're spending with your kids or with your wife versus how much money which you're trying to make. And there was, when you lost everything, or not everything, but when you went from multi-tens of millions, when you went from multi-tens of millions down to seven figures, it was one of the hardest, we identify as the second hardest period of in your and your wife's life. And it was that book, Purpose-Driven Life, where the very first line got you stumped for about a week of, it's not about you, because your mother taught you that everything was about you.
That's right.
But as soon as you could expand your vision to others, then you recognize that, well, hang on, it's not just about me. I can't also let down my wife. I can't also let down my kids. I'm letting other people down by thinking that it's just about me.
Yep.
And we really spoke about this idea of catastrophic loss. You can't ever avoid it, right? You can be in a helicopter, keep trying to beat the air into submission, but it's not going to be a graceful way that you crash. And when you crash, it really does crash. So you can try and hopefully have that never happen to you, but you said you got to be good at 20 things, or an expert in 20 things in order to be able to do that one thing, right? But you're always thinking about what's next, what could go wrong, what the contingencies are. And that because you look at all of those potential negatives, which most people try and shy away from, you actually end up having the sense of fearlessness to pursue the lofty goals and lofty objectives that most people will never even strive for, right?
Yep.
And you've recognized in a lot of your times you've had a lot of grace, you've had a lot of gifts, you've had a lot of luck, both in terms of how you're raised, the people you've had around you, the wife that you chose, the timing that you started up a tech company, and the types of people you've been able to meet, and having a trading system that worked off the bat. And you shared that your main values, or I think I've been able to determine that your main values were from how you made that key decision of kind of continue with your career or start a new career, and what was going to be the new mission. And you looked at the factors of things like time, money, how much you're going to enjoy it, whether it's intellectually stimulating, is it good for your marriage, is it good for your fatherhood, what are the odds you're going to succeed, is there an actual opportunity, like how big would the success be? And then by the time that you make up your mind, your odds are in your favor. and that your partner must be on board. Just because when you think that everything's going to be wonderful and you believe in yourself and you'll be able to achieve it and everything's going to be exceptional, doesn't mean it's going to work out that way. And if you want to avoid catastrophic loss or minimize your chance of catastrophic loss, you've also got to prepare for what's going to go wrong.
Yep.
And you need your support network and your mentors and everyone who believes in you to also be brutally honest with you as well. And that means you've got to be brutally honest with them too. And those are kind of the key messages I took away from what you've shared of your life story. Yeah. Is there anything which you wanted to add or amend with that?
You did a remarkably good job of synthesizing my rambling. No, I think you said it well. I really don't know that you missed anything. That's sort of been the gist of my life.
Is there any kind of final words of wisdom you'd want to share to listeners? Or maybe imagine that your kids come back around and listen to this episode. I know they're all adults now, or almost. But they come around at some stage in the future after you're gone and they listen to this conversation again. And you want to remind them of something. What would you want to remind them?
It's a bunch of things. It's like I said, the only failure is not being all you can be, right? Can't control what God gave you. Dream big. Pursuing small visions for yourself is no easier than pursuing the big ones. It's hard to pursue anything, right? To have a vision for yourself and define success and make success something big. And what do they call it? The BHAG, bold, audacious, hairy goal. Don't listen to the naysayers, right? Because they're everywhere. They mean nothing. It's the people that are in the fight that matter, not the ones on the sidelines, right? What's the old famous quote about in the arena? It's the man in the arena that counts, not the people watching. Don't give up if you believe in something, even if no one else understands. If it was good enough to start, then it should be good enough to finish until you can't. Take it to its full end. But sometimes you're going to have to try new paths, and that's okay. And they might be right turns. They might be radically different. They may be something you did not expect at all. But sometimes you got to do it, and I'm pretty positive you can do it. And then last but not least, I think something we didn't really talk a whole lot on, but I probably have not taken care of myself the way I should have over the years. Even though I'm in decent shape. But don't sacrifice your health. Don't sacrifice your relationships, because it's those relationships that are going to get you over the finish line eventually. You cannot do this alone. And maybe that's the other part. It's a team. It takes a team. My success, as you have done a great job, Harry, of pointing out, has not been me. I was a fortunate victim, a fortunate recipient of being born into a really great scenario and to be raised in a certain way. But my success in terms of the business world and kids and family and everything has all been tied to multiple people, but the ones nearest and dearest to me. So for that, I owe everything, and that's who keeps me going.
Thank you, Scott. I've loved this conversation. I really appreciate your time.
Likewise.
So I hope you received a whole lot of value from engaging in that conversation. What were the key takeaways for you? What can you schedule in your life right now to make sure that the time you just invested into listening to this exceptional conversation with this amazing mentor and this amazing individual is time that wasn't misused, but was time that you've allocated properly to enhancing your life and improving it? Whatever it is, schedule it now, practice it now. Be the successful person you're meant to be. Live with purpose.